Yeah, what's up, guys? I'm back again to give you another powerful video. This video actually contains information, some powerful information, some major essential information that many traders out there are missing, and is the reason majority of them blow their accounts. So I am going to explain these things one after the other, and I'm going to take you to my chart to demonstrate some of these things to you, so that you see that when you lose money in the market, it's probably because you are missing some certain things. But in this video, I'm going to show you every other things, and it's going to have part two because I can't explain everything. So I'm just going to explain five now. So in my next video, I will explain the other ones that I think is actually the problem of many traders. In fact, not think, I believe is the problem because I passed through some of these things, and it is as a result of my years of experience and learnings and all those kind of things that I was able to finally get the right answers. So that's about that. We'll go into it now. But before then, there's something I want to say. A lot of you guys have actually been coming to my DM now to ask for mentorship. I'm actually very happy that you people actually believe in me and want to get signals from me and mentorship. I'm very, very, very happy, and I am so grateful. See, the reason I don't, the reason I don't encourage. I'm still going to go back. We are still going to talk about the main thing. I just want to address this real quick. The reason I don't usually give signal or do mentorship is because I trade on 4 hour. My most powerful gift is patience. Like patience. I have that patience. I don't get hurry. In fact, I don't enter trade on Monday at all. As a rule, I don't enter trade on Monday. And if I take trade on Tuesday, peradventure, I may take the trade till Friday. Sometimes I take that trade till the other week before I enter. My trading is not for the week or for the week. People that check their trade and get scared easily. So that is my strategy is not for the week. Basically, that is what I meant. People that check trade often and scalpers and all this one. My strategy. I'm a swing trader, so my strategy is not actually for you. And so I don't know if you want to follow my step if you can. And then the second thing is a lot of us use different brokers, and what you don't know is that I use Xness as a broker. My broker is Xness. Your broker, the margin that they give, each broker gives are different. My stop loss, I may set my stop loss, and my stop loss may be just 50 pips. In your own broker, if you set that stop loss, it may be more than 50 pips and it may cost you more. And in the process, if the market should reverse against us, I may not lose more, but you will lose more. And if that continues, you are definitely going to wipe your account. That is another issue that I have, that I know a lot of these guys will not tell you. They will not open up to you. You just discover that you are copying trade, they are mentoring you, you are still losing money, you know. And then the second thing is that I'm not immune to losses, which means I lose money. I think in my last video I mentioned that last week I lose almost all my trade. I didn't make any profit at all. Imagine if you are my student during that period and you also, because you are taking the trades that I take, and you lose all your money. How will you feel? I don't want to be the reason why some people will be bad, feeling bad and all those kind of things. So that's the major reason why I don't want to do all this mentorship or give out signals. I enjoy my win myself, and I enjoy my losses myself. So, but one thing that I'm certain that I can say 100% and I can prove on every time is the fact that I made my profit consistently, and once in a while I take losses, which is fine. So that's it. But because of the pestering that I'm getting, I have decided finally that I'm going to carry out mentorship and I'm going to give signal. But at the same time, I know I have to charge, and I've decided that I'm not going to charge much so that it won't affect a lot of people. I don't want to be like other traders who collect $100, $200 to for trade. So I've decided that I'll just collect small amount of naira to put you guys through everything. And what I will do is that every trade that I'm going to trade, I will give it to you. And every trade that I'm going to trade, I'm going to give it to you. And once in a while, maybe weekends, we'll have live sessions. I'm talking about these people that will join the VIP. Let me put it that way now. Who will join my VIP Telegram channel? We are going to become a student. So every Saturday like this, we can have live sessions where we analyze charts together. I show you all these things, everything that I'm going to talk about in this video. I show you all the fundamental analysis, the chart analysis, and we already know what we are going to trade for the week. You know, so every Saturday we will be doing that. Yeah. So that is one thing about the VIP that I think I'm going to do. I may not be able to hold the session every Saturday, but most Saturdays I will be doing that. But it is certain that every week you'll be getting the signal directly from me. So if you are interested, my Telegram link is in my bio. So just check. Uh, and then send me join the group. You can message me directly there, but you can also chat me directly. Send me uh, DM, and then we can talk and then seal the deal, and then add it to the VIP Telegram channel, and then start making the money together. So let's get into the video now in a properly, the main subject of the day. Yes, before I forget, if you are yet to subscribe, please subscribe to this channel. This is the only channel, this is the only guide that is ready to give you everything about trading for free. Like everything that you need to learn. I'm ready to teach you what you need to learn, what you need to know. I'm ready to give you that information. And if you don't feel like subscribing, please be kind enough to like the video. Just like the video. So let's dive into it. As you all know, most of you will know that I trade different assets. I trade currencies, which is your financial market. I trade stocks. Basically I trade indices like Nasdaq, S&P 500, and I trade crypto. I trade crypto. In fact, I love crypto a lot. My favorite crypto is your Ethereum, and then the number one cryptocurrency, which is Bitcoin. Those are the two major crypto that I trade. Okay, so apart from that, I also trade crude oil. Yes, if you are familiar with my video, you might have seen me show some analysis on crude oil before. I trade crude oil as well, and then gold, as you know. So basically, you will know that I cover almost every major things that a lot of traders will like to trade. So, and I use the same strategy. Okay, so first thing I actually want to talk about has to do with financial markets. You see, a lot of people as I'm telling you all these things, I'm going to show you all these things on my screen, on my computer screen. I'm going to show you charts to prove everything I'm going to say. Okay. So the first thing, like I said, that I want to talk about is understanding peak values for every currency that you trade. This is what I mean. A lot of people, sometimes when you trade, for example, Euro USD and you trade GBP JPY, the peak value of these two pairs, these two different pairs, are very different. Take, for example, when you trade Euro USD, it takes, how am I going to put it? If you take, for example, if you set 50 pips stop loss and your lot size is, let's say, 0.02. Okay, let's say your account is let me just use a small tiny account here for so that small account traders will also benefit from the whole trade. Let's say you have a $10 account and you decide to use 0.02 lot size to trade this Euro USD, and you set Euro, that is 0.02, and you set 50 pips stop loss. If you set it, your lot size, your stop loss, that 50 pips stop loss may not cost you more than, let's say, $2 or 1.50 cents or $2.30, something like around that $2 or so. That is what it's probably going to cost you. For you to find out this, you have to, when you use MetaTrader 5 and you set your stop loss, click on the line of that stop loss. It will show you the cost of your stop loss. So you can see that. Now that is for Euro USD. Okay. If you set the same 50, if you try to set the same 50 uh, pips lot size for GBP JPY or Euro JPY, that stop loss will be very tiny compared to that of Euro JPY. If you are to maintain a very reasonable stop loss in GBP JPY, in this case, that stop loss is going to cost you a lot. In fact, it can cost you your whole account. It will cost you close to $8 to $9. Okay, if you are to maintain a reasonable stop loss for GBP JPY, it's going to cost you more. But if you are to maintain a reasonable stop loss for Euro USD, what else? Euro USD, Euro card, GBP card, GBP card, yeah. Euro, yeah, GBP card, Euro card, and some other pairs like that. The stop loss is going to cost you less. But when you are trading GBP JPY, Euro JPY, the stop loss is going to cost you more, which means that when you are trading or taking trades that has to do with JPY, if your loss size is 0.02, when you are taking any pairs that has JPY, like GBP JPY, Euro JPY, you have to be conscious. You have to cut that loss size into two. Like you have to have that stop loss, that loss size from 0.02. Maybe you should just change it to 0.01 for you to be able to maintain reasonable stop loss. If you decide to follow the same approach you use for other pairs for JPY, you are going to lose greatly because you are going to be risking high amount of your account. What I've just talked about now, just take note of it. When you are trading, just check. Let's say, for example, if you are trading Euro USD, for example, check your stop loss. When you are trading JPY with that same loss size, check your stop loss too. And you will discover that when you try to reduce the cost of that stop loss, you will discover that the stop loss will be very tiny, which means that it is easy for market to hit it and you will continue to lose money as a result. Therefore, what you have to do is when you are trading GBP JPY or pairs that has JPY, you need to reduce your loss size so that you can maintain a reasonable size of stop loss and you won't be risking much of your account as a result. So that's the first thing I want you to understand. The second tip that I actually want to talk about is you getting information. You see, I see a lot of traders. Some people will just say, "Oh, I'm just a technical trader." While some people will say, technical is 70%, what's it called? Fundamental is 30%. Uh, no, I think I don't know how they how they share that percentage, but I'm sure they put psychology. I think psychology, they say psychology is 70%, which 70%, and then technical is, I think they say 30%, and then what's it called? Um, Fundamental is 20%. I quite agree with them because psychology is actually the main thing. Yeah, I quite agree with them. Psychology is actually the first thing you need to deal with if you want to be successful. If you want to be successful in trading, you need to deal with psychology first. And I've read a couple of books related to psychology. In fact, let me show you one. Just give me a minute. Okay, so if you are here, you can see Trading in the Zone. This book is popular online. I actually ordered this book online for me to get it. This is one of the books that I've read when it comes to trading or psychology. That is how important it is in psychology. That is how important it is. I just see a lot of traders, they are not ready to invest in whatever they are doing. They are not ready to invest whatsoever. Let me tell you, if you don't invest in anything you are doing, believe me, you are not going to be profitable in the long run. So you have to invest, you have to learn. To me, I don't have mentor, I don't have mentor, but I spent a lot of money on books. Okay, books that has to do with training. Sometimes I order from Amazon's and all those kind of places. So that is how it goes. Everybody has their way of learning. So basically, what I just want to tell you is that what proof to you is that what they said about psychology being the major thing is actually correct. But what I want to tell you in this case, in my second tip, is the fact that you need to get informed. And what I mean by getting informed is that even if your psychology is high and technical is follow, you still need to take consideration of fundamental. And I'm not talking about you checking high impact news because I've seen a lot of people who just pay attention to high impact news, avoid it, or yeah, basically they just avoid it. But at the same time, when you are taking any trade, take for example, this is what I do if I'm trading indices. Before I enter any trade, if before I trade Nasdaq or S&P 500, I try to understand I try to read about this market, all these companies that form the basket of stocks that make this that makes these indices. I try to understand what is going on with these indices. I read. I don't just read them. I do all these things reading on Saturday. The same thing, crypto on weekends like this. I read. I get as much information about crypto before I trade the week before. So that way I will know what's actually going on. If there's going to be a huge shift in the market or something like that, I will try to understand. And the question is, how do I get this information? You can easily get this information from your trading view. I get all this information from trading view at this value. But a lot of people try to just sideline all these things. I don't know why, or probably you don't pay attention to it. So I will take you to my computer screen and show you some of these news, how I get them, and you will see how they impact the market. And I'm going to show you. So I will take you to my computer screen right now and let's check it. Now, before you trade any assets, take for example, this is S&P 500. Let's say if I want to trade S&P 500 here, just come to this place. You see this thing here. Come to this place and click on it. When you click on it, you are going to see news that has to do with stocks, that has to do with indices, US indices, and all those kind of things that can potentially give you where or show you where the market or what people are thinking about all this market. You can see this one, more ECB's lane, US tariff hikes have injected a great deal of uncertainty. Okay, uncertainty in the market. So here you can, when you click on any of this information, I think the stack differentiate between the US and European economies may narrow over the next year or two. US is slowing. So when you click on some of this, it would have to be a pretty big exchange rate movement to have a strong influence on inflation, but that would be a factor. So when you click on some of this information, you can read what is contained in to get detailed information of what is actually going on. Okay, so these are the things. Okay, these are the things that you want to I don't know why the news didn't load here. Let me check the second one. I guess it's my network. You just click on it, you are going to get necessary information. Okay, and S&P 500 and Nasdaq 500 tends to work in a similar way. So if you check Nasdaq too, you can easily check the news here. Okay, you can see. Funny enough, I love getting my news from this Nasdaq one because it's always up to, like, always give me that sure correct information. So you can see Wall Street rise down and S&P 500 set for weekly fall on inflation worries. You can see what's going on here. So they are already projecting that both S&P and Nasdaq are likely to fall. Okay, they are likely to fall. So you guys to look out for what is going to happen here, or you go to daily to see it more clearly and see if there is any resistance here, and then wait for price action pattern. Is already even showing some kind of reversal pattern here. Okay, let me go to daily and see what is actually going on there. Okay, so what I see is probably a retracement to this zone actually. Probably a retracement to this zone. So, but as far as I'm concerned, this market normally is supposed to move a little bit higher up before retesting this point. Maybe somewhere to, let me check, maybe somewhere around here. So I expect the market at least to move to this point before retest and then moving forward. That is what I think. But you can't predict, anything can happen. So the market might actually retraces down here before actually continue this movement. So yeah, definitely the market might retrace to this point. It may necessarily not get to where I expected. It may retrace here before continue this movement. So that is one thing you need to take note of. And again, so this bearish movement, you are ordinarily, if I was the one, I will wait. I want to see the movement down, because even normally I won't enter any trade here until I see retracement and buy, because this is a bullish market. So like I said, when you come here, you can read different information. What's it set to rebound at open after retreating on inflation jitters? US stocks stumble amid bearish breadth momentum setup 2 days ago. Same thing applicable if I want to trade gold, if I want to trade any other asset. Let me just use gold as an example again. Already I know that gold will crash because I saw this double top last week. I saw this double top last week. You won't see it. It may not be clear to you on 4 hour, but I do top down analysis, so I saw it from daily. Here it is, as you can see. And one thing about a lot of people is that they don't even know how to identify double top. See, if you see this week here, yeah, if the candle does not, the body of the candle does not close above this week, as you can see, this red wick here, if the body of this candle here does not close, like body does not close above it, body of the candle does not close above it, then the double top is valid. But if a body of a candle with its body not wick or close above this line, then it is invalid double top. So I saw this, and as you know, I use my divergence as well. Here it is, and from here to this place, as you can see, this is it here. It doesn't have enough power, and then the market is already making two tops here already. So that is an opportunity for a bearish market. So you can see it's now playing out, and I believe the market is going to retrace down to this point, down to this point before probably moving upward. They have not actually analyzed all this week, so but that is not why we are here. That's not why we are here. Let me show you what I actually want to show you. So if you come here now and read what's actually happening in gold. Gold recoups from 2-week low as trader eye US inflation data. Gold recouped from 2-week low as clinical. That is this one 3 hours. Gold over near 2-week low. So if you click on all these things, you can easily get what's actually going on in the market, in gold market. So let's read this a little bit. Gold prices on Monday drifted higher from a 2-week low hit in the previous session as traders build fading hope of US interest rate cuts ahead of a key inflation report due to last week. So all this inflation that's been talked about, you can go out and read about them or watch CNBC. That is what I do basically. I can sometimes, when I see all these things, I go to CNBC News on YouTube, their channel, I follow them, or Yahoo Finance, and which other one, Bloomberg YouTube channel, and Google to search what US inflation, about this information to get better understanding of the economy, so I know what to do when it comes to gold and stocks. So the same thing applicable to US, all these currencies. Sometimes I just come, maybe if I want to trade JPY currency. Now that I know that this pair has been trading bullish since about how many weeks ago now, and this is a critical stage for the price, already at a critical stage now. If you notice here, Japanese, they have to put in measure to make sure that their currency does not lose value completely at this point, and GBP crash against it here. So, and now price is already at that critical zone, at that value where they carry out this particular measure. So you should be watching out for crash against pairs against GBP JPY. So as you can see, so I hope probably there's going to be a retracement before there is this fall down, and the retracement may not even take place, it may just crash completely. So this is as a result of my understanding of their this thing. So if you look at it here, some news regarding this Japanese yen sentiment analysis. So you can daily FX, you can check this out, read about what Japanese is looking. In fact, when I checked this on Saturday, I saw that according to the analysis and sentiment bias, a lot of traders are looking, their bias is bearish. Like most of them are looking to sell this pair. Not only this pair, even Euro JPY, all these pairs, US JPY, all these JPY pairs, they are looking to sell. and that is as a so that is an important view. If you can read all this news to get better understanding of what I'm talking about. So always try once in a while to read this content, and you can do it before the market opens, like weekends, and see what to look out for. And especially when you see that the market is behaving the way it shouldn't be behaving. Like, for example, I wasn't expecting all this move upside down in Euro GBP JPY. I was expecting the market. Let me show you something quickly. I was expecting the market to to from here, from this zone, to break down and come down as far as either here. Okay, so but to my utmost surprise, the market is just moving upward. This is based on my full analysis, and I can't basically go through all that here. So that is about that. Um, okay, so learn to always read. So that's what I'm saying. So let's go back to my computer screen, and then I want to say something quickly. This symbol, whenever you see any red dot on top of it, let me whenever this dot, whenever you this symbol of news, whenever you see red dot on it, it means that there is an updated news, just there is a fresh news coming out regarding that asset. So you may want to check and read it out. I do all these things. That is why I'm telling you. Okay, so that's about that. Okay, so as you've seen in that video, you will discover that it is actually very important that you consider reading some of these things once in a while. And like I show you, if you see that red dot, if you see red dot on any of on that symbol, try to understand that there is an updated news on that particular asset. So you just have to read to see what is actually going on. Okay, sometimes you just have to read to understand what's going on. Okay, so you need to read, get a microeconomic understanding of what you are doing. Either you are trading indices, either you are trading crypto, or you are trading forex. Now, for example, now JPY, Japan yen now, sorry, yen has actually been Japanese yen has actually been weak now since about a week ago. And one of the things have been because ordinarily against GBP, it has been weak against USD, GBP, and Euro. So the question is, what is going on? In this kind of situation, people, as far as I'm concerned, before I enter market next week, I want to see what is going on with their economy. If what's going on, if it is inflation, whatever, if they have intention of putting in measures, and I feel they are going to start putting in measure to make sure that their currency gain values because the price of that currency now is at a level where they actually uh, put in measure to actually give their currency strength some weeks ago. So and the price is already at that zone now. It's already at that critical zone. So I hope anytime soon the current all pairs against JPY they are going to crash down. So that is the importance of getting information, reading news, getting fundamental news, and it's not even about trading alone. It's about you being knowledgeable. When you talk to people regarding these things, regarding trading, regarding trading, because this is a professional, this is a profession, this is a standard profession. It's not just a gamble. It's not your sporty bet. This is something that financial experts get into. You being able to discuss in details why you feel that an asset is going to crash or probably going to gain in the next few weeks with other people shows how smart and intelligent you are. So this is why you need to read and understand. In the during that Bitcoin halving that happens, I think last month or a few months ago, when I read about it, I understand what it is, and I know that this is an opportunity for anybody to buy crypto at that moment, even though crypto didn't really move the way I expected, but at least it made some move to the upside. As a result of that, everybody knows what that is. So all these things give you knowledge and make you understand. And I know as I'm talking about Bitcoin halving now, a lot of people don't even know what is Bitcoin halving, and they call themselves trader. That is the importance of getting this information. So that is the first thing. Try and read and understand every asset that you are trading. So that was the first thing. Sorry, that's the second thing. So let me show you. The third thing is about technical analysis. When you do technical analysis, at least make sure you have three things that gives you confirmation that this thing is going to move in your direction. Three things, at least three things. If those three things are not met, don't enter unless you just feel that don't enter. Wait, market will present other opportunities. Don't feel that, oh, the market might go in my direction, I will lose money. The market is always there. The opportunities will always come. So you just have to be patient. In my own case, I'm going to show you my own the things I look for. First of all, in my own case, let me just first show you. I will take you to my computer screen and show you in a moment. The first thing is I want to make sure that I have that price action reversal pattern. It could be triple tops, it could be triple bottoms, double top, double bottom, name it. It could be any of these things. But I want to see that first. And I want to see it in a critical zones. When I say critical zones, I'm talking about your psychological levels, like your supply and demand or whatever you call it. I want to see it happens there. That is the second thing. The third thing is my RSI. For those of you that have been watching my videos, you will know that I use RSI. The third thing is my RSI. I want to make sure that my RSI agree with what is actually going on at that moment. Okay, so if I want to top it all, sometimes I want to confirm if if it is a retracement that has taken place. I want to make sure that the retracement is at Fibonacci golden zone, but it is not mandatory for me. In as much as I have three confirmation, then I'm good to go. And yeah, so if after all you are trading or doing your technical analysis before you enter any trade whatsoever, regardless, make sure that you have at least three confirmations, three things to that give you signal that you should buy or sell. You don't just jump into it. Okay, so that's the first thing. So let me that's the top thing. So I will take you to my computer screen and show you these three confirmation that I look for and how they work together on my chart. So let's look at it. So when I say I look for three things in forex before I trade them, at least three confirmation. That's what I do. So if you look at this trade, this is Ethereum USD. This is one of the trades I took recently on Ethereum. Okay, and when I take trades, I hold them for a long time. Yeah, as all these green lines are my take profit. I was believing that if was come to us, my first, I don't usually take my profit. Actually, what I do is I move my stop loss. This is the first part. I move my stop loss below it. As soon as it candle close above this, my first take profit, I move my stop loss. And then as soon as this one close, I move my stop loss again. Then this, but I know that from here I will get out of the trade, and that is what I did. But the market actually shoots beyond that. If you check this trade alone gave me over 300 and something pips, and I made a lot of crazy money from it. I don't like bragging, but I just have to say it. So I'm going to tell you why I took the trade and three confirmation that I look out for. As you can see, 391 pips on a single trade. Most of my trade are not less than 100 pips. Okay, in my next video, I'm going to show you how to get those kind of trades. So now, first of all, what I do is this. When I take trade, I first of all want to make sure that price action, critical zones, this point, price has actually touched it many times, as you can see here. Although I do top the analysis over that, this video is not about it, about complete trading. So you can see market respect it. You get. The reason I took this one was because I feel the market want to retrace down to this neckline, yeah, and then continue upward movement. So I use this place as my first take profit, and this place as my second take profit. But when the market got here, I noticed that this week, as you can see, it's been rejected. I just have that feeling that the market might still crash, so I decided to jump out. So the market touched first, second, third time, and then it came down to that point. Now, if you look to your RSI at this point, you will see that there is no momentum to the upside, to the downside anymore. So from from here to this place, there is no momentum. Sorry. From here to this place, I didn't see any momentum to the downside anymore. So I know for sure the market will continue, will move upward from here. Okay, so that was my first confirmation. When the market started doing all this ceremony, I know as soon as it got here, I just tried to put enter. As soon as I saw this, even from this few movements here, from this all these tiny movements, you will see that as it's making this like triple tops, 1 2 3, the RSI from here to this place is just, even if you start from here to this place, you see it's just moving. You can see from there the momentum indicator was just moving up instead of down, you know. So that is to show you that as sellers are struggling to push the market down from here, and then even the price action is showing you whatever you want to call it, maybe double top or triple tops or four tops, bottoms rather. So so that was what gave me the entry. Yeah. So the first thing I want you to take note here is the fact that, first of all, this is a key level that has been respected many times. That you call it demand zone. Secondly, my RSI, my momentum indicator is showing me momentum to the upside, not to the downside. That is the second thing. Then the third thing is the price pattern. The price pattern here. You see, either you want to call this double bottom, either you want to call this. If you come to daily, for example, now you will see it's going to be giving you some kind of triple top vibes. Okay, triple top vibes. Those are my retracement patterns. So the first, give me some minutes. Let me just bring this out. Okay, so this is the first one. This is the second one. Okay, and this is the third one. No, this is my cycle. Get us again. Okay, so 1 2 3, those are the three bottoms rather. I just know I just keep missing this thing. Tops, bottoms, and so these are the three bottoms, and I saw that it has been respected like this. I believe that this third time the market is going to go crazy, but I couldn't maximize the profit. I ought to have still keep putting it, but you don't have to get greedy in this market. When you know you've made reasonable money from a trade, just get out, especially when your target has been hit multiple times. In this case now, about 3 times. Three of my stop loss, sorry, 3 of my stop loss was completely hit. My take profit rather. So why would I take the trade? Even if it is this first one, this is about 100 pips. Okay, this is about another 100 pips, another 100 pips also. So basically, all I just want to say is that make sure you have at least 3 confirmation. My 1, then price pattern 2, and then my RSI 3. I have more confirmation. What I do is more than just 3. I also consider the trend and the confirmation analysis. When the market was coming down at this entry point, I didn't just, because I start from my monthly analysis, I use my Fibonacci from this point to see where the price is going here, and I realized that this is a 50% retracement golden zone. So I know any activity here should be taken very serious. You can see it is a perfect golden zone retracement for me. So I was just waiting for the reaction. And let me tell you something. It doesn't necessarily have to touch the golden the line, the Fibonacci. It is a zone. So within that area, yeah, anything can happen. It could be in between these two lines. It could be above. It could be below here. Yeah. So as I saw this 3, and I, with all those things, with all this Fibonacci on daily and Fibonacci on weekly, seeing that it's a 50% golden zone, and then it's resting on a resistance zone. Now it's making it a support zone. All these things come together. And in fact, I start my analysis from all this. So it's not just those three things. So I put all these things together to give me a good entry. Imagine if I have been patient enough. This is crazy. By now, this is a crazy trade. Let me just tell you, this is going to be over 1,000 pips. This is going to be over, if not, may not be up to, but over hype sell day. So let me just check. Funny enough, it's more than this is about 1,000 pips, 998. This is over 1,000 pips. So if I had wait, I might have catching a lot, but don't get greedy. That's another thing you need to understand. Don't get greedy. I got that from this my last take profit here. This is actually not my last take profit. This is my last take profit here. This point, it's my last take profit, but I couldn't wait, so just pick it here. So ordinarily, if I had seen a retracement back to this my take profit zone, I will just wait for another price action pattern to show like double bottoms or reverse head and shoulder pattern, and then I will take it to the next point. That is how I used to do. So enough of this, and let's proceed with the video. Earlier I showed you this thing. You can see this red button. If I'm to take this trade today now, I will read if I'm thinking of entering Ethereum today, although I'm not seeing any entry opportunity. You see this red point show me that there is an updated news, so I will click on it and check and see what is going on there. LI blockchain have to set new transaction record, surpassing Solana with this million daily transaction. Okay, I didn't say anything. Don't say anything. How to buy Ethereum on Ethereum? I don't say Ethereum layer. Can you set a new all-time high at 47 billion? So some of these news, you can click on them and read what is going on there. That might give you that where to look for. So basically that's it. So let's go back to let's talk about the other point. Okay, so now that you've seen that, the fourth thing that I will actually talk about is related to what I talked about in the third part, which is getting information, reading about every asset you want to trade. So the third thing is actually understanding your asset. What I mean by that is that, you see, there's something we call commodity currencies. And I know a lot of traders out there don't even understand what is commodity currency. They just trade every PS that they see. What I mean by commodity currency is that these are actually currencies that are being affected, that can be easily affected by commodities. Take for example, AUD, Australian dollar, can easily be affected by gold. If gold is gaining seriously, believe me, the value of AUD is going to appreciate in value. So that currency is going to be strong. The same thing, if gold is weak in the market right now, there's going to be serious crash. I believe there's going to be some reasonable crash in gold. If you check your technical analysis very well from daily time frame, you will see it has formed a double top at a critical level. I guess I didn't. I will check later too, and it's about to crash, probably make a retracement, and then before continuing its bullish movement. But the reality is that during this crash too, AUD USD is going to be very, very weak. So they work vice versa. Vice versa. I don't know if that works. Like when gold is weak, AUD is going to be weak. When gold is strong, AUD is going to be strong. I'm going to show you on my chart how I will pair gold and AUD, and you will see how they keep moving. As gold is moving up, you will see AUD coming down. As AUD is coming down, you see gold moving up. You get. As gold is moving up, you see AUD moving up. As gold is moving down, you see AUD moving down against every other pairs. So I will prove that to you now. So let's move to my screen and you will see it. Okay, guys, let me quickly show you this before I move on. I won't be able to cover much on the commodity currency of the thing, but let's quickly look at AUD USD. Now, I told you that when gold is rising, the AUD too will rise. Abi. Now, let's look at this chart. This is 4 hour. Okay. So, if you look at this 4 hour, you will see AUD was gaining against USD around this point. Now, look at gold. So, at that period of time, gold was what was gaining. And as soon as gold started crashing down, as you can see here, what happened to it also starts crashing down. Let me show you that clearly. It also starts crashing down. Okay, it also starts crashing down. Okay, let me show you the pattern. It also starts crashing down as gold was coming down, AUD started crashing down. And as you can see, as if gold was trying to gain here, you can see AUD2 trying to make that movement. Okay, if you go in time and you compare, you will see that AUD reacts towards gold. The same thing, Canadian dollar also reacts to oil. So you can try and compare this thing yourselves, 4 hour, 4 hour, but it's not always like that. I must confess to you that it's not always like that. But economically, these commodities drives this currency. That is why in economics we refer to them as commodity currencies. Just as you can see, it tends to follow a similar pattern. So if you look at the way gold crash here, can see the way gold crash here. Similar situation happen here with AUD USD. You can use your bar charts to also your candles rather your candle to see things for yourself. Candles. I just use that so that you can see things. So you can see AUD rising here, AUD rising here. As soon as gold crash here, as you can see AUD2 trying to show you that crash here too. You can see it crash, and then gold seems to be going here. AUD has already japa going up. You get so they tend to work. So sometimes when you want to trade these pairs, you just have to consider the commodities that is driving them. You can check for Canadian dollar to Canadian and oil, NSD, and you can check NSD too. Dairy products are the one driving that, so you can find a way to check if you still want to check. But I think this is enough for you. So all you just have to do is to be wary of what gold is doing at a particular time when you are trading some of these pairs, or what their commodity is doing at a particular time when you are trading some of these pairs. So that's just what I want to show you regarding this commodity currency. So it is a knowledge that you need to have for you to add to your knowledge. All right, so let's go back to uh, talking about the last point. So that is about understanding your assets, which is the fourth thing. So the fifth thing that I want to tell you is that whatever strategy that you are using, regardless of the strategy that you are using, try as much as possible that it is based on price. Okay. I've seen a lot of people using some lagging indicator like moving averages, and they will say when they cross, that's when they buy, when blue line, green line, or 20 moving average, all those nonsense. I know some people will say it worked for them, fine. If it works for you, fine. But I'm telling you now for a fact that if whatever strategy you want to trade, make sure that the base of that strategy is price. Make sure price is based on price action. Okay, make sure everything is based on price action. So understand price action pattern and everything before you trade, before any strategy you want to use. You will discover that in my channel, I don't talk about different strategies. I only talk about one strategy. The only thing that's probably maybe different is the fact that, okay, I don't even think there's anything different. All my strategy has been based on price action. Price action. I keep talking about all those price action patterns and how I put in one or two things before I take those price action patterns. So the same thing applicable. Whatever strategy, either you are an SMC trader or so, make sure that you use price action. SMC basically, their strategy is also based on price action. Make sure whatever strategy you are using is based on price action. That way, you are going to win most of your trade. So please don't forget to subscribe and like the video. Please, I'll be very grateful if you like the video. Even if you don't feel like subscribing, just like the video. I will be very, very grateful. So thank you and see you in my next video. Bye bye.